Hello and thanks for checking out ChartGuys.com. We're proud to be one of the most successful technical analysis communities online, teaching you the skills to become a more confident, effective, and informed trader. Join our community of hundreds of analysts worldwide working together to learn the charts, generate profit, and achieve financial independence. For access to daily live chart analysis and market coverage, a thriving chat community, along with dozens of hours of exclusive educational materials. We look forward to seeing you. Let's check out some charts. Hello everyone, checking in on the broader market. Bears getting follow through after the weakness we saw yesterday. We saw a bounce overnight in futures. That bounce led into pre-market for SPY. We then double topped at the high of pre-market. So high of 287.94. And I actually thought we got closer than that. But anyways, we failed to break the high of that top. And then we dumped. Again, led by the financial sector. We'll look at that in just a moment. But we didn't get the knockout blow. And the bulls survive another round. So 279.13 is our line in the sand level. And at the end of the day, we did break that level by 17 cents, which we know is not convincing. And then we bounced into the end of the day. And after hours, we're pretty much where we closed. So overall, the Bears have short-term momentum. We know that much. We know that on our bounces, we are looking for hourly lower highs. The pre-market bounce, we were just looking for a lower high. Here's our lower low. On any bounce that we see from here, we're just watching for an hourly lower high. If the bulls can change the hourly trend with that being our low, and if the S&P 500 futures chart can change the 4-hour trend and use the 4-hour trend to be the equivalent of the hourly trend on names like commodities and crypto and things that have longer hours in their trading day. But if we can change the 4-hour trend on the futures chart, it's a potential weekly bull flag. Now, I'm not going to be looking for a weekly bull flag, but I'm just saying if we were to see a very notable shift back to the bulls from here over the next couple days, that would be a possibility because it's essentially a bear break with no follow through. So we'll just throw that out there. We'll check in on it tomorrow. Have to see a solid green day to even say anything about that tomorrow. Just be aware of all possibilities. Now what the Bears need to see is a convincing break with another red day tomorrow. If we break 279.13 more convincingly, and let's look at SPX, and that level 27.97, so broke without a bunch of follow through. So if we see another red day tomorrow, it will be a convincing bear break, and what it will then be is our high, low, lower high, and lower low. We will be in a daily downtrend. We will zoom out to the weekly chart and say, okay, clear weekly consolidation underway, all-time high, low of the dump, lower high, and we'll scout a higher low compared to 218.26. And we're going to look for a tightening range into late summer, taking it one day at a time. So back in hindsight, my scaling in trade would have been great if I just did one thing different. So remember when I was going bearish, you've been watching these videos, and I was watching the 12-hour chart on the futures, and this little move right here threw me off. If we had just dumped and then saw this as a continuous bounce, I would have been scaling in, my stop would have been over this high, and I would be in a solid profitable position right now. This little higher low and higher high threw me off, and what I did was I went extra conservative. I lowered my stop from here to here to have much lower risk, and in the end that cost me from potentially having a good trade setup. So again, being in conservative mode as a trader this year is going to hurt me by leaving money on the table and not hurt me by losing money, which I prefer, but this is a good hindsight example for me and something to review as a mistake. Because my original trade game plan of scaling into the bounce with 3 positions and using that level as a stop would have played out wonderfully. It's when I changed it based on this action that shifted. So I'll probably go over that more in depth in a later video, but just off the top of my head review for now. So for our individual sectors, IWM, bear break under 122.25. We can call IWM in a daily downtrend. The bear break is more convincing here. We broke it by over 1%. So high, low, lower high, lower low, weekly consolidation clearly underway. We're looking for a higher low compared to 95.69. And you might be looking at these weekly charts and saying, Couldn't we just drop to lower lows? Yes, but not without bear volume comparable to the initial leg down. If we start seeing huge weekly bear volume, we'll start talking about a drop straight to lower lows. But in the absence of huge bear volume, weekly tightening ranges will remain the most likely scenario, and the indication that our weekly higher lows have been set will be a daily trend change back to the bulls. QQQ. Another factor for me when looking at this weekly consolidation and market weakness is the tech sector. QQQ is in a daily uptrend. Amazon, Microsoft, Apple. Those are the four most important tickers for me from here. QQQ and those three names, because if they do not lose their daily uptrend, we can very simply say, if those four tickers do not lose their daily uptrend, SPY bears are not going to get notable follow through on weekly consolidation. It is a criteria for the SPY bears to see notable follow through. We must lose daily uptrends in those names. For QQQ, anything above 211.12 is a daily high or low. So we either need to see a big dump on high bear volume for another couple days, or a high or low, an inability to break the recent top and then roll over. And look at our leaders. The largest holdings in QQQ and SPY, Apple is a very strong daily uptrend. We haven't even tested daily 12-period exponential support. We're looking for a higher low. Microsoft, more significant pullback, but still in a daily uptrend. And Amazon, tightening range, all-time high, low of the pullback, lower high, and we would have to break 2256 for a notable bear break. So I am watching these names, and for the bears to prove it, they have to lose the daily uptrends. XLV, high, low, lower high, all about 96.89. That's our line in the sand level. Has not broken yet, and we know that's going to be very important. Again, same thing. If that level doesn't break, SPY bears are not going to get notable follow through. The last 2 days, SPY weakness, yes, we are seeing, the sell-off in QQQ and XLV contributing, but it's XLF. XLF today down 3%, healthcare down 1.1%, and QQQ down 1.25%. So way weaker 2 days in a row for the financial sector. We've been seeing the financial sector weakness comparative to those other names for quite some time. Clear daily downtrend. And we're now looking at 2050, a gap to fill at 2014, and then 1936. The weekly top is very clearly set. And we got about 15% to go until we drop to a lower low. SPY has about 21% to go. So we're looking for a higher low compared to 1749 unless we start to see a ramp up of increasing bear volume for multiple weeks. Biotech sector, also just looking for a daily higher low. And this is one that right when the market closed, I pulled up the XBI chart and I kicked myself because first hourly oversold conditions after blue sky breakout with a great bounce. That bounce ended up being 3%, which means LABU bounced 9%. I chose to trade QQQ and TQQQ on the bounce. I'll do a quick trade review there. But hindsight, should have chosen XBI and LABU. So I had made a good entry on TQQQ right near the bottom. Why? What led to that? Well, I entered TQQQ based on SPY. I know XLF is the major reason for SPY weakness. SPY was dumping in the middle of the day towards our 279.13 support. I know that's the line in the sand. I know that's the most important level. I love bottom fishing trades when short-term RSI levels are crushed heading to a key support. Everybody's watching that support. So 5-minute RSI was in the teens or right at 20. 15-minute RSI was in the low 20s. Hourly RSI was in the low 20s. So as soon as 280 broke, and right now I'm looking at the 279s on SPY, knowing the key support, I started scaling into TQQQ. I didn't even look at the TQQQ chart. I entered once right near the bottom and then the bounce started. I would have a second position ready to go that didn't fill, and then I would have placed my stop had I filled 2 positions, so I'm not just bag holding and we keep dropping and I keep scaling in. That's the last thing I want to be doing. I want to have defined risk, but I don't set my stop unless the maximum amount of orders that I'm planning on entering, either 2 or 3, unless they all fill. So only one filled, exited half on a short-term bounce, put my stop below the low of the day, and was then risk-free on that trade. Didn't really make anything from it. Very small win, but it was all based on SPY. It's a bit of a tangent. SMH, high, low, lower high, failing to break resistance. And now it's all about 126.11. If we form a higher low, we'll have a daily equilibrium to be watching. TLT, double bottom and double top. So 162 is the double bottom, and 166.37 is the double top. We have to lose the hourly uptrend from here for it to be a notable double top rejection. We are still in an hourly uptrend, which means the bulls can potentially have another chance tomorrow. If we lose the hourly uptrend, low, high, double bottom, double top, and we'll see if the bulls can give us a higher low from there. So pretty range bound. Here it is on the 4-hour chart. It's an equilibrium. Bears need more follow through for a clear lower high. The dollar, close to breaking resistance. Bull day for the dollar, 144 is key resistance. It's in play this week. We've got 2 more days. If we don't break this week, we will certainly break next week. And it's notable to me that the dollar's at the high of the day and gold had a bullish day. Gold daily higher low is now 1692. We're just walking up these little higher lows. Key resistance 1724, 1739, 1748. 3 resistances, 4 supports, still very tight. Surprised the market volatility the last 2 days and volume has not led to a break yet. We also had Powell speaking this morning at 9 a.m., but not leading to a metals break. Silver also showing up for the bulls, but not much going on. Still patiently waiting. Trying to set a new daily higher low. Key resistance here is 1585. And the miners are red today. Why are the miners red? Well, actually, they're green from where we closed yesterday, but not a strong day, while gold was strong. And the reason is SPY weakness. Don't forget that these miners are traded on the broader markets, the exchanges here. And if we're seeing S&P 500 weakness, that is going to hurt the miners a bit. The best case scenario for the miners is SPY and gold both going up. That's when they put on the turbojets and have huge moves. We are still in a daily uptrend. 33.37 was support. We held 33.42. We're grinding 12-period exponential support. And again, just a waiting game now, waiting for this gold break. Which direction is this tightening range going to break in? Oil had an initial bullish reaction to the inventory report, but not enough to break 27.95 hour high. We're $2 below that key resistance. 24.40 is support. We're $1.50 above that level. So we're still range bound. The inventory report did not provide enough catalyst to break this range. And those are really the only 2 levels I care about. If then statement, if 24.40 support is holding, the bulls are in full control. Bears have to break that level. Natural gas bears continuing this onslaught of lower highs every day, 6 days in a row. 1536 and 1477 are the only supports. The weekly higher lows have been broken. And just another example of nat gas bears breaking the bulls' hearts. And we can very simply say, if then statement, if weekly 12-period exponential moving average is resistance on natural gas, the bears have complete long-term control after all these rejections and some very impressive rejections over the last month. So can the bears follow through into tomorrow with a convincing break of this daily support? Or will we head into the end of this week with the possibility of a bear break and a lack of any follow-through? With the most important factor for me, can those 4 major tickers in the tech sector hold their daily uptrends? I appreciate you watching. Do good things, and we'll see you tomorrow.
Legs getting better. Back to flying. Things are looking up. Just got a cut on her chin, I'm just noticing for the first time. She was in a battle. Rhododendron bush popping off. At the peak there, that's got to be 15 feet high. Rhododendron's poisonous if you burn it and breathe it in, and it's poisonous for goats to eat. But it's a good bush.